Hi guys, Ben here and welcome to Motivation to Invest. Breaking news, Warren Buffett has been at it again. Selling, despite his motto being, be fearful when others are greedy and greedy when others are fearful. At the moment, he's more fearful than everybody else. So he has recently sold the majority of his stake in Goldman Sachs. In addition, he has trimmed his position in JP Morgan. This caused the stock to plummet by over 30%. So what is going through Buffett's mind, and is he fearful of the market at the moment? In this video, we're going to find out, and I'm going to analyze Buffett's moves and see what implications that may have for you as an investor. Let's dive in.
Coming in, flex. I just wanna win.
Welcome back, guys. As mentioned earlier, Warren Buffett recently sold the majority of his stake in Goldman Sachs by over 86%. He trimmed his position in JP Morgan also. So what does this mean for you as an investor? It's clear to see that Buffett is acting very strange compared to his normal strategy of purchasing businesses in distress during recessions and crashes. Why the change and why is he so different this time? For example, Goldman Sachs, he actually invested into Goldman Sachs during the 2008 financial crisis and bailed them out. And in this crash, he's actually selling them off. So it seems very, very strange for somebody like Warren Buffett, one of the world's greatest and notoriously long-term investors, to be selling off his bank share. Now, I did a previous video discussing why Warren Buffett sold his airlines and what that means for you. But I believe there are a lot of similarities between that video and this video, in that I analysed that Warren Buffett's position is very different to the average investor. Warren Buffett is the CEO of one of the world's largest investing conglomerates, Berkshire Hathaway. This enterprise has a market cap of $400 billion. And Buffett has often stated that he has a big responsibility to his shareholders, many of whom are close to retirement. Buffett has often stated in the past that one of his biggest pain points will be losing his shareholders' money. He stated that he wouldn't care too much if he lost a vast proportion of his own wealth, but he'd hate to lose any of his shareholders' wealth. You've also got to look at Buffett's age. Is he too old? Well, he's 89 years old and he has that investing wisdom which he has built up over time, like compound interest in his own words. And I still believe he is one of the greatest investors of all time, and I have a tremendous amount of respect for this great man. However, he is acting extremely out of character. He stated don't bet on America, yet simultaneously he's betting on America. The good news is he's not sold his entire positions in these banks. So if you're a current shareholder in them, I personally would just hold out. So what are the opportunities from this? So I'm an opportunity-minded individual, and I don't look at these situations in a good light or in a bad light, but I look at them as a certain activity or a catalyst for opportunity. And there is plenty of opportunity around. Back in February, Warren Buffett sold some of his position in Wells Fargo Bank. This time around, he didn't sell any position in Wells Fargo. Yet despite this, the stock still fell by over 47%. That could be a great buying opportunity. And I will be doing some further research on that stock. So what has Buffett been buying? Well, Buffett has not done any major acquisitions, which you would expect during this time. However, he did state one reason for this. Previously, during market crashes, the government doesn't step in and bail out everybody. The government tends to sit on the sidelines and will potentially bail out one or two essential businesses. Whereas this time around, the government stimulus package is literally bailing out almost every single business. So Warren Buffett doesn't get the number of phone calls he used to during the market crashes to basically say, Buffett, I need your help, I need bailing out. He said his phone has not been ringing as much this time around. So it does make sense that he's not done large acquisitions. Also, looking at the size of the Berkshire Hathaway enterprise, $400 billion. Buffett likes to own a large stake in companies. He doesn't like to own a small amount, and some of these businesses are just too small. The market caps are so small, he'd end up owning the whole company, 90, 100% of the company. There's only certain companies that Buffett can look at compared to your average investor. Buffett stated in the New York Times that overall the banking system is not going to be the problem. He added, "They are not a primary worry of mine at all." Berkshire remains a major shareholder in American Express, Bank of America, Bank of New York Mellon, JP Morgan Chase, PNC Financial, US Bancorp, and of course Wells Fargo. Buffett has been accused by critics of sitting on a lot of cash at the moment. However, during the Berkshire Hathaway annual meeting, he stated that due to the size of Berkshire Hathaway, he is only effectively sitting on 20% cash, which isn't a lot in his mind. One stock he has been buying shares in is PNC Financial. He has steadily been increasing his stake in this bank. Right guys, so having a look at PNC Financial Group's data. So we can see here its current share price is $97.25 a share. Now, if I look back, 97 here. So it's the same price approximately as it was back in 2016. PE ratio just 9. Market cap 41 billion. Dividend yield 4.7%, which is great. Let's look at this company in a bit more detail. So Buffett already owned shares in this company and then he's just increased his stake, trading at 17% below its fair value. Pays a high and reliable dividend of 4.73%. According to the analysis checks, it's got 6 out of 6 on financial health here. Sufficient allowance for bad loans. Assets to equity ratio is low. Liabilities made up of low risk sources of funding. Loans to asset ratio. Allowance for bad loans. So it looks in a pretty healthy position. Insider trading. So the good news is more insiders have purchased shares than sold off. So 16th of March, $2 million worth there. Just 5,000 there. Another $2.5 million by Andrew Feldstein. Let's see who he is. If he's on here. So he's the lead director. So he's purchasing a lot of shares. He obviously has faith in the company. So PNC Financial Services. So we're over on Stockopedia platform now. Stock rank just 75 over the last 30 days. Value, good value. Momentum quite low. Let's look at its financial data. So total revenue. Its revenue has been steadily increasing over time, as you can see here. But as the great Peter Lynch would say, this looks like a slow grower in terms of how it's progressing. But banking industries generally are. Operating profit, net profit, yeah, steady growth. Earnings per share growth. So obviously down this year. Projected to grow to 9.56 growth there. Dividend growth, this is what it's all about. So the dividends have been very regular, however it has been decreasing since 2018 for some reason. Of course this year it's clear to see why, but the previous years it's not clear why. But this is the main reason why the share price has dropped. Obviously, the forecasted revenue for 2020 is going to be very low. So it's $17 billion forecasted. Previously, it was $18 billion. $3.8 billion forecasted net income. So that's down $1 billion. So yeah, this is what the share price reflects. It reflects the fact that these banks are going through a tough time. And that's why the share price is so low. Let's look at the analyst consensus. So 14 people who say if you currently own the stock, say just hold. 6 analysts say buy. 3 it's a strong buy. There's no one saying sell. Let's look at what other details we've got here. Yeah, so PE ratio 10 compared to the market. Price to book value 0.8. Now it's good to look at the price to tangible book value because that's the real cash that this business has. So it's nearly 1-to-1. The shareholders' equity is nearly equal to the actual share price value. So if the company was liquidated today, it'd only be slightly indebted. So that's interesting to see there. It's quite good. So generally with this company, I'd say it's a safe bet. And I can see why Warren Buffett's increased his stake, but I can also see why he's not purchased a massive amount of extra shares because There's not a large amount of growth in this company from the looks of the revenue. It's a slow grower. However, it's a safe, slow grower. So if you just want somewhere to put your investments, it can be a pretty safe bet. That 4.7% dividend is fantastic. Much better than a bank account. So what are your thoughts on Warren Buffett's recent moves? Does he predict another market crash? Or is he just being cautious as he has such a large responsibility to his shareholders? Let me know what you think in the comments below. And if you enjoyed this video, go ahead, smash that like button and definitely subscribe. See you next time.
Coming in, flex. I just wanna win, LABB, who we running with, coming in, flex. I just wanna win,